You ready?
Yep.
Ready? Go.
All right.
Thanks,
So for my budget, revenue speaking, it's very, very difficult to judge from one year to the other what building activity is going to be. Fortunately, it's been good for the last couple of years, so hopefully that stays the same. A couple of my big budget items. One is we're losing all the source water protection funding, so we're going to have to start any of the expenses. We're going to have to come out of my budget opposed to the fund that we got. I am going to be looking at building permit increase this year. Historically, I haven't quite hit what my actual budget numbers are. It kind of varies slightly below, so I'm hoping to hit it. And increase in wages, that's reflecting Stacy's appointment to building inspector and grid movements. So that's pretty much what I got.
Yeah, just an increase of $30,000 seems substantial. I remember looking at the right sheet, maybe.
Yep.
Yeah, 30,000. Well, no, I do, but that's mostly the wages. Are you talking about
the 24,000 would be increase in wages and benefits. So that's Stacy moving up, Cam and Stacy both stepping up positions in the grid.
I forgot about Cam. That's right.
Cam's in there too.
Yep.
Do we get revenue from parking if we put the bylaw out there, but we don't get the revenue, do we?
The paid parking spaces we do. That doesn't come into my budget. I'm not sure whose budget it. Okay, roads get it.
Gets that?
Well, and it makes sense. They're the one maintaining the lot.
Okay. Don't have to defend them.
Ironically, though, the dog we do the enforcement of that. We do the enforcement of the dog bylaw, and we don't get the money. So
What the heck, eh?
I know it's not good. Any other questions?
Thanks.
Right.
Just wanted to make a point. There is going to be a residential building permit increase, and if you look at the line item, I think it's been $120,000 annual revenue for 5-6 years. That's probably been too high. We've just sort of let it sit there. But I think for the first time, that's why it's not increasing. But I think even with our good years, we've just met it. But the increase will allow us to meet it more regularly, we think.
Right.
But as the CBO said, it's kind of hit and miss thing. We've had really good years, and you can see we just barely make the revenue amount there. So it was too high years ago. So.
It's been artificially high.
But we didn't have the heart to take it out, so we just left it.
And again, part of with the source water expense is we were lucky that the government actually picked up a couple of years.
Yep.
We knew sooner or later that we're going to have to do it. It's a sort of download on us to make sure that we can cover nothing we can do about it.
No,
it's
no,
part of
it's what we mandated. So
yeah.
And the cost of 722.
Oh yeah.
Also, I believe there's over $100 million in construction since 2011.
Yeah.
That's lots of construction.
Yeah.
We've done well. Yep.
Good. Any other questions?
Nope.
Okay, thanks, Terry.
Perfect. Thanks.
Cemeteries. Oh, you have to start with cemeteries. And how they start roads off with cemeteries. That is kind of interesting.
I don't know, but the guys behind me want a mic. Don't give it to them.
Oh, yeah. Go ahead, Brian. You're up.
Okay, on cemeteries, just showing increase in wages and benefits for that. There's nothing else changing.
Any questions on cemeteries? Internments. I'm just looking at the internments.
Down in Harris, was down one in Harrison and up in Palmerston, I think.
Up in Clifford.
No, Clifford. Palmerston stayed the same.
We're all okay. Good. All right, municipal drains.
No change in municipal drainage, stays the same.
All right. An easy one. Starting off the easy ones, eh?
Roads maintenance.
Roads maintenance, administration.
There's your wage increase and your heat and hydro. Again.
We're looking at the right one.
Roads maintenance.
Road and sidewalk?
Roads
I
maintenance.
missed one here somewhere. What?
151.
151.
151.
Road sidewalk.
Oh, there we go. I went right by it. Okay, there we go. All right. Much difference. Okay. Questions?
That's nothing.
All right.
Roads administration.
Yep.
Increase in the wage and benefits debit. Reserve contributions, we put 40,000 there. Then your IPM 60,000 inflow.
I know. Still.
Or 156. 156.
Yeah.
Okay.
Any questions on that?
Questions?
Yeah, but still.
Mayor Bridge,
Yep.
you can see the 40,000
Yep. That's
there.
the,
That vehicle replacement plan says 220. It should be 240.
that's I was going to say 240 there because we just went to. Right.
Which one?
This one down here, increased road
Yeah.
contribution vehicle replacement plan.
Oh, there. I see.
So that should be 240. That's where we've had in other places. Okay. Streetlights.
Yeah. So, got increase in wage and benefits. That's some minimal, and increase in debt repayment of 11,438. Increased revenue by 5,600. Of course, your hydro cost jumped 8,500 small dollars.
So Mayor Bridge, this is one where we really see the impact of the hydro
Yep.
increases, because when we started that program, we were able to put $30,000 away. Now we've reconciled with Real Term, our supplier of our LED lights, and then with Hydro One increases, plus new lights. We did
Yep.
put some new lights
Yeah,
that
we
are
did.
outside that. Our contribution to reserve is only 15,000, so we'll be recommending some increases in that. So while we are much more efficient, I think the lights are more dependable. They're certainly brighter. They're dark sky efficient. We are putting money away to replace them. Their warranty is a 10-year warranty. They will last beyond 10 years, but we'll need that extra time to make sure we have sufficient funds to replace them.
So you're happy with that, Corey?
Yeah, so if you note, I'm recommending an increase in the overall revenue. We've held that flat for 2013, 14, 15, and 16, which in effect, it's on the assessment basis. So in effect, our mill rate has come down every year. And when we went into the LED thing, the plan was to put enough aside to pay replacement down the road. And I think if we keep flat all the time, we aren't going to reach that. So this is a modest increase, and we have a detailed amortization table from Real Term now, and so we know what the maintenance costs are and what the.
And I think, did you, Dave, I remember, were we not also anticipating having to buy a truck back? Like a bucket truck? No, I wasn't in that.
No.
So we don't have to do the bucket truck, even though the maintenance, we're going to have to do the maintenance. We're able to do it with.
We don't actually do the maintenance. That's part of the thing.
Well, they do it, but I mean, after
yeah.
10 years, we're going to have to do the maintenance, right?
Yeah, exactly. So we got to put.
So
money
where's
aside
this?
in the
Where's that
future.
bucket truck reserve coming?
Well, that's going to be in there too.
So I think we have to
so,
look at this because
yeah.
I mean we might have to buy a bucket truck because we may be back to doing the maintenance. I would assume,
or rent it.
Contract.
or contracted. It's a possibility we get contracted. Okay. All right. I just couldn't remember if we actually had that in that thing. Yes.
Ron was ahead of me. And
That's all right. Go ahead.
Okay. I was getting on the maintenance. If we see a light out, light was out on Main Street now, and we know that now. And so I get called in. What do I tell the customer?
You just contact us, and then we call them in, and then it takes them a couple days usually to get here, unless they're in the area.
Okay. So and I would just explain to the person that calls me that it'll be probably up in a couple days.
Yeah. I think somebody in Palmerston said it's been out for 6 months or something.
Oh yeah.
Yeah, like okay. So, but you're just managing to call us now, right? So if you do see a light out, you can call. We're not upset if you call.
And I certainly get calls, and I usually refer them right back to you. But I would like to know what I could tell them, and I've always meant to ask that. So probably within a couple
If you
days.
say a few days, you're pretty close.
Okay.
Just
Ron.
a question on the 10 new poles. Is that like that would be because it's not in the real term agreement? That's outside of the urban areas, like the roundabout. Is that?
Well, it's
No,
the
there-
poles they didn't put in, but there was White's Road. We put some in, and
King Street.
King Street and Palmerston.
Oh yes, the industrial. That's
Yeah,
right.
and we did some along that really dark section going out. What street is that? King Street. And
the real term got their money because we went from the old ones to the new.
Yeah.
So they get a percentage of the savings from that. But when we just put new lights in, they don't maintain them. There's no hydro savings because they're new lights. So
Correct.
we're on our own with those.
Couple things, Brian. Where'd they come from to do the lights? Where's the truck come from?
I'm not sure where they're based at, but
Walkerton. Okay.
Walkerton.
And so, what is our record? Like, are we Walkerton?
I was gonna say, holy mackerel!
So,
She knows everything back
Gonna
there.
take over Public Works?
No, that's our contract one. That's
Okay.
but that's for real term. They come out of. I think that's it. Is it one of them? I think maybe up that way.
It's an hour's drive.
Yeah.
so for the number of lights that we put in, how many have failed? Any idea? Do we keep that?
Yeah, we have a record of it over there. It's not bad.
Good.
Yep. All right. Street lights, Don. Next up, trailer park.
Trailer park, just increase in rent. I think we're down to two trailers. Two in Harrison, yeah, and the other one's full.
Sorry.
We're
No
like,
worries. That was a gun going on.
Okay.
With the deck.
Any questions? about
Questions
that?
on trailer parks? No. Okay. Vehicle costs and allocation.
Yes, no change proposed for vehicle cost and allocation. It was all included the road needs study for your
Yep.
fleet management.
Okay. Pictures.
No picture of my new water truck.
Look at that. Look at that crane is picking up that big piece of concrete. Look at that. See that? I think somebody told us one time we wouldn't be able to do it. That's why I just want to mention that.
Everybody's
I remember
favorite.
the day that happened.
That truck?
And we actually got to ride in the new truck. Plowing match for the parades.
Santa Claus Parade. How was it?
Fine.
I mean, the
Wet.
ride.
It's a little dampish.
Very wet.
Yeah, there was no roof on it. That's
The
for sure.
driver, how do you do?
We had good drivers this time, David.
Oh.
Two different drivers, but they were both professional drivers. There wasn't much jerking and stuff.
We weren't falling off over
Have
the
enough
back.
time.
I think it's done on purpose.
All right, winter control. Keep going, Brian. We're
Everybody's
on a
favorite
roll.
winter control.
Yep.
Well, of course, you're seeing increases there.
So it's also expected to go way up.
I'm hoping not.
Do we have a deal with the county on our salt, right?
Yes.
So that we know we can get supply. That's the big thing.
Yes.
Which is always,
Huge.
if you get a bad year, sometimes you can run into problems there. But
Bulk buying too for the county.
yeah, bulk buying with the county. Yeah. Okay. Moving along. We have the town. TLC.
Yep.
I thought it was tender loving care, but it's actually town landscape care.
This TLC, tender loving.
It is.
I think it's a bit of both.
It's a bit of both.
It makes the town look beautiful.
Yes, it's
So
Tender
we've
loving
hired
care.
a full-time TLC personnel.
Mhm.
That's where you're seeing the increase in wages and training and expenses. And a great job
Oh,
he does.
and it's really obvious.
Yep.
Out there, the
Top notch.
the comments we get from the taxpayers and whatnot. It was a positive move for sure.
And just having the expertise on is a big thing because we're going to be able to use them on design work and other things that we might have had to do design work outside for. Any other comments on that? No.
Just quickly, his public relations with people are really good
Yeah.
too. Just really good.
Second.
Okay, we're down to sewage treatment distribution.
Yeah, you have sewage treatment, distribution. You got decrease in your transfer. Do you want to talk on that?
Yeah, you want, this is,
this is something that
went from 0 to 690.
Yeah, so we indicated that when we did our modification in August. You'll see it in water and sewer.
Yep.
So we've been doing our job, allocating for the long-term life cycle and going broke doing it, basically. So what I recommended at that time and what we've instituted is let's get the operating reserves back in the black. And in 2017, sewer will be back in the black if we do this. We'll just take a break from the life cycle. Water is probably going to take, I'd say, about 3 years or so. So, like, before we had meters, we weren't quite there. And then when meters came in, we had the revenue shortfall, and we really had to subsidize operations. So we kind of agreed this is not sensible to be planning for 30 years down the road when we've got a problem right now. So address that one. There's no net change. We're still putting the exact same amount into reserves, only we're putting it into operating rather than long-term life cycle. So hopefully that'll work. But you'll see some radical changes in all of them.
Yeah, that's why I was going to ask you.
So then maybe we should change the word description on number 5 then.
Well, this is overhead, and then you'll get in. You're going to see some numbers going the other way in the subsequent phase.
Because I know we're probably going to get a call saying, what are you doing? You know, all of a sudden you're changing 619,000. And for me to explain it like you just explained it, I'm not that capable.
No, and I just, if Bill, and then I think if we follow in, there's a bit more reports that kind of give us
there is.
Over the years, we've been trying to improve how we communicate this budget to you. It is a challenging when you have life cycle versus operating reserves and different facilities and so forth. So we added in a summary chart. If you're looking at page 178, on the bottom.
178,
And so this is on the sewage overhead budget.
Correct.
You see revenues, expenses, and net to capital. Now that one, so it says the following shows net impact on reserves of the sewage operating or sewage overhead budget. And all of those, it says the positive figure illustrate that this function does not contribute to reserves. So those are positives. So it's 116,603. It's a positive figure. And then there's $9,000 in debt in there. So that's just for that one. If you move to the next page for the Clifford Lagoons, so you can see the net impact on reserves of the Clifford Lagoons. In 2015, the net impact was $85,700 going to that operating reserve that Gord's referring to. In 2016, it was $269 only. And in 2017, we project it to be $47,000. So the negative figure illustrate that this function contributes to reserve funds. And then there's also $21,000 of principal and interest payment in that budget as well. So that 47,212 is net of borrowing or debt in that service. So you can see for each service we've done that now. And then if you go to page 182, there's a summary of the overall sewage. So in 2015 overall, we contributed $666,431 to reserves. And then last year, because of the way the revenues were, we had to bring money out of reserves to pay for the system. It actually didn't. It contributed 78,000. It took 78,000 net from reserves. And then this year we're budgeting it to bring in 499,619 into the operating reserve. So that's where we'll be at year end if the revenues stay where they are. That includes $451,000 worth of debt.
Yeah. Go ahead.
So I guess the bottom line is we have to follow the legislation as cost recovery, right? Mm-hmm. So we were doing the net reserves over and above that legislation. Did I get that right?
A lot of the cost recovery is the replacement, and when we're talking water and sewer, we're talking very long lives, right?
Absolutely.
So ideally, we could be break even on the operating and have enough left over. Unfortunately, we haven't been able to do that, and we're working our way back in position so we can do that again.
I think that's the bottom line. That was the words I was looking for right there. Okay.
And I believe we'll do another review on how we're getting along in June or July of this coming year to make sure we constantly keep that ongoing. So it's kind of sits on the budget, but it really doesn't come out of taxes, right? So it's kind of one of those, we still have to do it on its own, but we bring it up at budget time, I think, just to give a flavor of where we're going. If we're not, like last year at this time, because of the meter situation, we were pretty well telling the council that we have to raise the rates, right? So that kind of makes you think, well, we're raising water and sewer rates at the same time as we may be raising taxes. So I think everybody had that concern. I think this time around we're probably going to be all right, but we're going to wait and see till June, but probably not looking at increases. Well, we're not sure.
We'll hopefully get back to the plan.
Yeah, we'll get back to the plan. Yeah.
Just wondering on page 182, under service measures, how do you lose like 19 sewage customers?
Okay, good question.
For instance?
Yeah, I saw that too.
Yeah.
Like
When
four
we
or
went
five,
to
okay.
yeah, when we went to meters. So if you had, I'm just gonna say you had a 12-unit apartment building. For us, that was 12 customers.
Oh yeah.
Now we're charging by meter, one pipe. We just lost 11 customers.
Oh, I see.
But
okay.
really we haven't, because we've got this tremendous increase in new
Right.
houses and
Okay.
that. But so that's going to be a one-time thing,
Okay.
this decrease.
That makes total sense.
Yeah, I couldn't figure out Clifford. We actually went from 306 to 347. That's 'cause
Exactly.
we have residents going in there. You know, yeah.
I have a question. I don't understand machine time allocations. Comes up as, but what is that exactly? What's a machine time allocation?
That's when we. Okay,
Sorry?
it's where we bill out on our machine time, like when the use of the machine.
So who
the
are you
truck
billing
times.
it to? To ourselves?
Yeah.
It's another department using
Other
their
customers.
equipment. They're paying all the expenses for that piece of equipment. So
Okay.
this is one
So
way
it will
about-
show up again in another budget then, because these are all minus numbers. So somebody's going to have it as an expense or a positive or a something. Because I was trying to figure this out and I'm going, I don't, and I mean, there's too many pages to go back and forth and go, so can I see this reciprocated somewhere else? But and I figured it was that.
It's like Gene in administration, for instance, on salaries. We'll budget out some of our salary costs to sewer and water because if Lindsay spends half her time doing water bills,
Right.
You can't take it out of the tax base. It should go to that. Similar to when we have, if a department share equipment, rather than have the truck in
Like
in
my
water.
truck, for example, split between my three divisions: water and sewer.
Okay, because there's a lot of it in this department, like, and I'm just going, okay, where are all these trucks going? Or I assumed it was that sort of thing.
It's because
there was a lot of it, so I was trying to figure it out.
Because sewer and water can't be on the tax base.
Oh,
Because you've got people in the country that aren't sewer and water, so we can't charge the country people.
That's
So
right.
when anybody asks you at the coffee shop, I don't get sewer and water, so you say, yeah, but you don't pay for it either. That's all these adjustments.
My husband and I have that discussion at our house.
There you go.
Frequently.
I knew you would.
But what we get for
I
our
know,
tax
I know.
dollars.
But that's important that constantly gets out there because I tell you, if you probably ask 10 people in the country, 5 of them still think that for some reason they're paying for sewer and water in town.
Yep.
Oh, no, I know.
Yeah.
Street lights too.
Even after you've told them.
Right, Judy?
Street lights too.
Oh, street lights too, yeah.
You bet.
Like I know the one little subdivision out in Drew said, well, we want street lights too. And I said, well, but you pay for them. Well, we don't want them. So that's a whole different world. Because I said, well, I'd get rid of ours in our subdivision because I wouldn't call if one went out. Anyways.
You don't have that many.
No, we don't have that many. Okay, anything else in sewer and water?
You're old.
I think I'm getting to the end of my pages here, Bill. Am I? We're done.
Well, we've got, you're done water?
Yeah.
Okay.
Yeah.
You didn't want to talk?
Basically the same as.
We got Wayne Metzger with that new one, the replacement one, right?
We got one left?
Water.
Oh, water. Sorry, water. No, we did sewer. Sorry, I haven't got
Wastewater.
water yet. Yeah, water treatment. There you
I
are.
was going to say you jumped right.
I jumped a little fast, All right.
Same, but different.
Any questions on the water side of the waste, Bill?
So just again, we tried to break that down. I think we'll work on the business or the operating budget summary. We'll work on that for next time. But the summary of reserves contribution is sort of done the same here. And then if you go to page 193, you can see that we're contributing again to the fairly significantly to operating reserves there as well. I think I did a calculation that between water and tax, we're contributing very close to $1 million a year to our reserves.
Yep.
You agree with that one?
Yeah. Yeah, and so much of it is you're putting in with the left hand and taking out with the right. So like water, we were approaching $1 million negative reserves. So this will offset that over 3 years or so.
Yeah. But again, Watson does a review all the time, make sure they're online, and it's something that we have to make sure. Okay. All right. Yes, Jay.
Okay, so I've got the opposite question then for water customers. Because they went up in Palmerston and in Clifford. Sewer did too, but
In the customers. So
Customers
that
for
means
water.
that the new housing units, if you like, offset that other effect. And
By-
that's
by a
what's
lot.
happened there. Yeah.
yeah, like there's 20 different.
A lot of that, I think, is Ann Street.
21.
Yeah.
Well,
Yeah.
yeah, but in Palmerston there's a difference of 21 more customers in 2016 than in 2015.
Yeah, I can believe that.
Yeah.
There's a lot of
Housing starts in Palmerston. Well,
But then I'm thinking about that 12 unit.
Finishing Milton Siler.
I know what you're saying, Judy. Yeah.
I'm thinking about that 12 unit apartment building though that you used an example for the sewer.
Yeah. Okay, here's another offsetting one. Sometimes, and it's not always possible, that we can put in a separate service for some of those multi-unit ones. Not so much the huge ones, but maybe the semi-detached ones and that too. And so you might have had one customer, and the customer refers more to the person paying the bill versus the actual service there too.
We may be able to go back so for next year and sort of weed out those results and go back so you just see the number of unit increases in each municipality, part of the municipality for next year. But it is a little bit confusing. The 2016 should be actual customers now, as opposed to.
And that should be a one-time thing.
Yeah, and I mean it's not a dollar amount either. No. I just thought it was kind of interesting.
But I think a couple of points, you've taken steps, say at the by selling the Diamond in Clifford and the Ann Street development, and the George Street development in Harrison, to get more ratepayers on the sewer lines and water lines that you have. So in the long run, that'll pay off because they'll pay hopefully for a long time.
Okay. Well, that wraps up that part. Bill, did you want to make any all comments or?
Well, just if we go back to your summary report.
Yeah.
And if you go to page 32.
32.
I'll very quickly try and make some of those points.
Right.
Just as a summary. We're slightly under 3% at this time.
Right.
We know that there's 118,000 more in reserve contribution than debt payment in the tax-supported budget this year, and that'll almost double next year if we put the debentures coming off of Clifford and Palmerston into reserve there. We didn't talk about federal gas tax. We do get 240,000 of that roughly a year. Part of that is already allocated to a project, but we do have that to allocate this year. We do have reassessment that impacts on things. There's a lot of funny rules around how the assessment works. For example, if assessment decreases, it has to go into the budget right away, whereas it increases, it gets phased in over 4 years. So he has the fun of playing with those numbers to make sure he complies. I mentioned the increase in Ontario Municipal Partnership Fund contribution that we're benefiting from. And then each of these others are sort of summaries on the individual budget. The council budget's up a little bit, and the reasons for all of those increases. Just to note that our Maitland Valley and Saugeen Conservation Authority budgets are going up very small under this as entered. Talks a little bit about the Minto fire on the next page. Increases and the public works overall increases, and the benefits that we're at 240,000 of 420 needed to get into our full capital replacement plan, and remembering that we had to also rob those reserves to pay for vehicles we have bought, but that over time is a significant benefit to the town. We've talked about the LED street lights and why we're up, and some of the reasons in individual budgets where the wages and benefits are up. And I'm going to report back to you on all of those as a result of your resolution, just so you can understand that a little bit more clearly, and we can make it transparent to everyone. I think a short answer to that is we restructured and then everybody went on maternity leave.
Yeah.
So
basically,
but that's not everything. So
we have more maternity leaves. We'd be all
we need
back
more
to,
people to be off next year, but I think everybody will be working next year.
Never know.
So if you know of anyone,
Never know.
no pressure.
Be careful what you ask for.
Yeah, I know.
There'd be a magic chair somewhere.
The hydro increases are significant in the budget, utilities, and we may find, depending on what the provincial government does, that it's maybe not quite as bad, but I'm imagining that it will be. And we'll need to do that. So whether they're going to moderate them as a political decision, I don't know. The other thing is we will start to get our rooftop and our FIT applications online in 2017. We haven't put any of that revenue in this budget.
Right.
So we know we're making nearly 10,000 a year on the smaller ones. So over a 20-year period, that's 160 to 200,000 that's come into the town. And of course, so at least even though we're paying hydro increases, some of that's coming back to us through that. And when we get the macro fit or the fit ones in, we're looking at 60 to 100,000 a year for that, which is, you start to get up to $1 million or $2. So I think the staff did an excellent job. The department heads brought in a very responsible budget at 2.9.
Amazing.
We've been coming in other years at around 5. So I think when the county and education are done, we may find that this is pretty close to where we are, 2.9 likely. So but when we come back in January, we should have more information on that for you. So if you're uncomfortable with 2.9, then there's some things we can do here that a little bit of leeway, but we certainly appreciate the questions and the efforts that the department's put forward in putting it together, and your thoughtful questions today. So.
Good. Do you want to go first and then Mary?
Doesn't matter. Mary
Lou can go first if you want.
Once again, I just want to reiterate Bill's thanks to the department heads, and to Bill and Gord for this wonderful package. Just a small suggestion, and I guess I want council's opinion on this. When we're looking at the sheet that shows the 15 year to date, the 16 budget, 16 year to date.
What's the page number?
What page number you got?
Page
Well, I happen to be on
Pick one.
37.
It's just
It's all
the same.
Yeah, they're all
All
the
the
same.
same.
Yeah.
Same, yeah.
The 2015 year to date is just to September. I'm wondering if it would be more beneficial to us to December 31st.
That'd be easy.
And then we're looking at it compared to the 16 budget.
To
Now,
date.
when you look at 16, there's allocations that aren't made, right? So you're going to see that the expenses are way down. So that's why I'm asking. In September of last year, they weren't made either. So you're comparing apples to apples, which, like, at no point in time do we ever say, this is how we did on our budget, which would be nice to see. Like, here's what we set for a budget for 2015, and here's what it actually came in at.
Maybe instead of replacing, add a column?
Is that too much work?
If you look at page 74, fire actually did it. the way I think you would like to see
Show
it.
offs.
Yeah, they actually.
That's right.
Yeah, they did.
So I think you can see year to date for 2016 and year to date for 2015, but you could also see the actual for 2014.
Yeah.
So
So getting
you get
the
more
20
fuller numbers.
right
Yeah. But,
So-
but you'd like to see December 31st, 15.
because it's most
Yes.
recent.
Yeah.
If that's a possibility, and the 2015 budget
Yeah.
decided too. So we're seeing how we actually did to the budget.
Right.
Yep.
If I may, just further to that, you wonder if, as you're trying to grasp with budgets and things, when we get a report and Gord does a summary, we paid this check, and we paid this check, but for me, it would be helpful if you knew that was we were going to be on budget with it. You can tell me that we've spent 150 on this and 200 on that, but did we allocate 400 or did we allocate 100,000, which would change the picture drastically, depending. So the same sort of idea.
Quarterly, we do go over
Right.
each budget compared to the
Where we are
actual,
in variance.
Yeah, that one's a lot.
so that we know that.
You do that at it doesn't come here.
Yeah, it comes. We do it at our
Most
council
years.
meetings.
Okay,
Yeah.
all right. Because I'm thinking when I look at the reports, we get that summary in it, and then they send us. They're supposed to send us a detailed list of all of the bills paid, but that takes a while sometimes to come.
Yeah, I think that's fine. It will come, but I think the variance reports that we do quarterly, that's what you have to look at, Gene. And so we get those variance reports.
Okay.
And I know the hard part is for Gord, in fairness, for him to come up with the numbers. September, I mean, if we were doing this, I don't know if you could get October in there. I guess you could do October.
I could, but it wouldn't be very good.
It wouldn't be very good.
In fact,
so,
like September, it's got almost everything, but not everything.
But I guess to myself, it would be helpful to me if I was looking at the 15 budget, the 15 actual, and then the 16 budget, then the 17 budget, and then I'm saying, like, where did we? If we were so far off in the budget, why is that changed?
Yeah.
The budget is.
So I think I get what you're saying, Mary Lou. If the 15th, if the end of 2015 we were like $25,000 under budget, are we budgeting too much? I totally agree, because that's the other thing. You don't want to pad it in the sense that you're always going to be under, but you want to have a little bit of wiggle room too.
Exactly.
So so I see what you're saying. That would make sense, because and then when we actually finalize the budget, usually by then we have the end. We can find out, well, all of a sudden we're $40,000 under on that particular one, and we're still budgeting that same amount. Why are we?
Yeah.
Is there a reason?
Yeah, and basically we've kind of done what Chair Caldwell has said. Only it's done at the department level.
Yeah. So we
already have.
Yeah.
So it's not that difficult to do.
I was going to say, I think they kind of have it there, because I ask those questions sometimes, but we could put it here so you'd have it, and then you'd be a lot easier for us to make that.
We may, not committing everybody, but I think we could probably, if Gord has it, insert it through eScribe into this budget, so you'll actually have it for the 24.
Could you do that, Gord?
Yeah, 2015, because I
I
do that as a cross check with Keystone to make sure that the Excel agrees to Keystone.
And I would almost say that if once we do that, if you have any concerns, then you certainly can give us a call or give Gord a call and say, oh, and he'll probably have a good answer. He usually has an answer for every time I think I caught him on something. But he usually comes up with the answer. So between him and Bill. So, but it's important to see that. I agree.
I just want to finish by saying I don't think our taxpayers appreciate the amount of effort and work that goes into this document, and how important it is to us that we go through this in detail. And so I just want to thank everyone responsible. I find the operating personally harder than the capital, because the capital is like a wish list, where the operating is you've got to take into consideration all of the changes that you know or that you're guessing are going to happen, increases, etc. for next year. So once again, thank you to everyone responsible for this and for putting it together and coming out today to explain it to us.
Ron?
Great, thank you. First of all, I echo all those comments and appreciation to the department heads and whatnot for literally taking responsibility and coming forward with responsible figures. Where I want to comment is this is, I guess, my 6th budget being on council, and without a doubt, it's been the easiest to comprehend in those 6 years, and so, like, nicely done with those little changes that Mary Lou or Councillor Caldwell was talking about, and is going to make it even better. I can't say that for sure, but I know that this was the fastest I ever come to comprehend the budget was with this one, and I can't say how much I appreciate that, because it's tough work.
David, did you have a comment?
Yeah, I was going to just say the same thing. It was so much easier to, I mean, every year it gets easier, I think, but it was well put together, and it was easy to go over the columns and find out and see exactly where the increases were. My other question was, we look at the federal deficit and then we look at the provincial deficit. Where is there stats in reference to county and municipal deficits all over the province?
Okay, so before PSAB, everything came to zero. Whereas now you've got, with the recognition of all your tangible capital assets, most municipalities, as far as on their balance sheets, are showing incredible surpluses, but it's just the recognition of the assets. So there's all the FIRs for all the municipalities are online, and there's another thing called Midas where they kind of do comparative. So you could say, okay, how does Minto compare with this comparable municipality in Eastern Ontario or something? So all that information is there too. But again, the financial statements have moved so far from cash basis that it's maybe harder to compare that particular item.
But if I may just add to that, we don't run one. We don't run a deficit here, and most municipalities don't, because we're on cash basis.
Kind of hard. Yeah.
But I don't want to say we're running on a huge surplus, because we're not.
No,
we'd have to sell off Hydro One.
Yeah.
Realize it. Let's sell our assets. So
where our deficit is in our asset management, in our infrastructure. We have a deficit there. We know, and that's what we have to look at. I think, Dave. That's
Well, and when you look at our $63 million worth of assets, will the government, and it makes you wonder where the PSAB, where they were going with it, because who knew years ago when it started?
Yeah, well, one place we've already covered it, is the OCIF formula grant that relates directly to that figure.
Yep.
And it's got your households and your income. There's a lot of other things in there. So they are starting to use that data.
Yeah, they're trying to come up with a formula that says certain sizes and certain asset. If you've got a higher assessment base, then you should be able to handle that under property taxes better than the person that's in a smaller community that has more infrastructure for less population. So that's why we win on those, and that's the good thing, I guess. Good. And anybody else? I just want to sum it up, and I know from the last few years, all the changes we've been making throughout the process, and I think I heard the department heads actually say this, that the spreadsheets, it's getting easier for them to understand it too. And I think that's why we're getting good input, because I think everybody that, and that's the thing. I mean, about a budget, if you have a budget and it's too complicated and it gets put on a shelf, and then at the end of the day you go look at it and say, I went over budget. The department heads look at their budgets all the time, and they see where they're coming, and they see those little spots, Mary Lou, where we're doing all right here, but we're not doing all right here. So there is some adjustment throughout the year, which is what budgets are for, right? Right. Is to look at them on a moving basis and say, well, man, it might be something you have no control over, like utilities go up, and so you got to know that you're going to go over there. So can we shave anything over here? At the end of the day, you got to balance somehow, right? And I give the credit a lot to the staff on that. They do a good job of that, and with Bill and board's direction, I think they've learned to live with it. I'm sure. And look, they're all smiling over there. They love it. Anyways, thanks very much for all your hard work and dedication.
Okay, thank you.
And that's it. 4:00. I got a couple things I got to say here, right? Okay. Which one's first? So, do I move into the town of council, the Minto council? What's this one about, Bill? What?
You were in committee of the whole, so you have to move back into
Back in the council. Okay, moved by Councilor Turton, second by Councilor Elliott, that the committee of the whole convenes into town of Minto council. All in favor? Okay, and then I go, moved by Councilor Dirksen, second by Councilor Anderson. The council of the town of Minto adjourns to meet again at the call of the mayor. Everybody, thanks for a good budget meeting and keep up the good work. And we'll see you on the 6th, everybody, hopefully.
We'll see you at 7. Gotta go.
6th is my
Have fun.
house.
Yeah.